Welcome back to the trading tree. The market is it's not going away, and this what's happening to the market is not bad for the market, like a lot of people seem to think. These retail traders are this is now a thing. Coronavirus has kind of changed it. Started and the virus was gone, man. The market's not going anywhere.
It's not.
Nope.
It's
Look
not.
at cryptocurrency alone. Look at how it's performing. I mean, right now it's pulled back some from its new all-time high, but both crypto and the actual market are both acting very bullish. I think that
I
there's
like
still a potential correction, but with all this that's happened now, I don't know if that's necessarily going to happen.
I think the pullback for crypto was absolutely necessary. I think it was too hot, too fast, and I'm glad that it cooled itself down. But let's be realistic. Is it going to do it again? Absolutely.
Yep.
It might run harder the second time than it ran the first time around. And that was building anyway. I mean, that run was building. You can have your doubters, you have your haters out there that say Bitcoin is not going to be anything. There's way too much money invested in Bitcoin at this point, and I'm not even talking about retail money. We're talking about money you can't even fathom invested in Bitcoin at this point. The major names that are invested in it have hedged their future on it. So Bitcoin will run. It will hit 50,000 before summertime, and its next run is going to be hotter than its first run. You can just see that, and it's trending. The consolidation is beautiful right now with what it's doing. It's range bound, but that's fine. Look at the range that it's sitting in. It's a big range, but it's a big mover, and the Asian market controls Bitcoin. It's not the American market. It's the Asian market that controls it. So I think once all this Wall Street bet stuff cools down, Bitcoin is going to do its thing. It's just too much going on right now for Bitcoin to get the attention that it needs from the retail investor. Stocks are hotter. GameStop going from $20 to 500. Yeah.
Yeah, yeah, but I mean, I don't think, like you said, Wall Street bets ain't gonna cool down. It's not necessarily gonna cool down. It's gonna become a norm, but it's gonna convert over and spill over to the crypto market as well. You're gonna see those same type of plays happen in the crypto market. You're gonna see those same type of plays happen all over the place. Like you said, they're just gonna be targeting the low float, high short interest. All this information is available. That's another thing that they could do. You could see happen. Restrictions be put in place is that they'll take away all this information that's available and not report it.
They were talking about Dogecoin possibly making a serious move. Is it going to make a serious move? I don't think so.
I think that it did make it serious.
It already made it serious.
I was going to say
it's up a fucking. I mean, even now it's pulled back and it's still up like 800%. I don't know, something like.
It's still in the pennies,
So
not the sub pennies.
No, more than 800%, 8,000, something like
8,000%. Yeah.
8,000. And so when it was up in the 4 cents, I mean that was it was up a shit ton at that point.
Yeah.
So it's already had it, in my opinion. Now
that was fun.
That's a joke coin, man. So you can invest in it, like play the momentum thing intraday scalping or whatever. And that's a perfect example. Or any of this AMC shit, GME shit, whatever, Wall Street bets crap. If it's a good stock, fine, whatever. But if it's a piece of shit stock, like I don't know if y'all know, but I don't know if Wall Street Bets has been behind it the whole time. But this whole gamma squeeze shit, that's what the GameStop is. It's a gamma squeeze. This has been going on with Tesla for the last year.
Yeah.
Tesla has been gamma squeezed this whole time, and that's why Tesla stock has done what it's done.
Right.
So this is not new. It's just they've targeted shit stocks, basically. Stocks nobody wants to.
Something that will have a ripple effect.
Yeah, the company's not doing well, but the company is a known company. They're all known names.
Yeah.
I mean, except for like fun and stuff like that, what they've moved on to recently after that. But the original ones, they're all known names. every single one.
They're household names.
Yeah. So
Yep.
so when it starts spiking, because it's a household name, you're just going to get random Joe Schmo buyers that come in too to help your cause out. You say, oh, I know that name. Oh
Right.
man, something's happening. Something's going on. let me throw some pennies at it.
So you have your 80-year-old grandpa that's retired that's never touched the stock market before, and he heard something on the news, and he goes and opens up an account, and that's a company that he knows about because it's an older company.
So just be careful though, with these plays. These GameStop or whatever, eventually that will probably come down.
Yeah.
I don't know when. I could not tell you when. I would not be shorting it right now. That's for damn sure. But eventually that shit's going to come down. Any of these plays, if it's a worthless company that's not going anywhere, it's going to come down. Blockbuster has a liquidating ticker on the OTC market, BLIAQ and BLIBQ, and those have made big moves as well. So they're targeting these type of companies. Unfortunately, Radio Shack doesn't have a ticker. Otherwise, Radio Shack would probably go through the roof.
Yeah. Or Circuit City, man.
Yeah, exactly. Circuit City. High five eyes.
Yeah. Oh, God.
I think I tweeted something last week. I was like, come on, what about Radio Shack and Blockbuster? There was actually a mention of Blockbuster, and that's why I said, and Jay, might have been you that I was talking to that actually mentioned it. I was like, oh, you know what? Yeah. And I started thinking of all these old 80s companies that I was kind of looking to see if there was anything there.
But that's what I mean. But... So, like Blockbuster, for instance, if you're going to invest any money in Blockbuster and let it sit there and hope that shit's going to come back or something, you're living a fucking pipe dream, dude. So just keep that in mind, especially with something like Dogecoin, spark of why I got into it. But that is a joke coin. It has no real value or use in the crypto market, financial market, or real world. So you're investing in just whatever, some momentum play, and it could just crash back down to whatever it was worth, 0.0004, I think it won't. That's behind a decimal place, .0004. So just keep that in mind, man. And that's what I was going to say as far as like intraday scalping. We use a squeeze setup, which is great for intraday scalping, but you can also use any type of just volume, momentum. If you're just playing off of momentum, you can take a scalp. And basically what a scalp would be, during intraday, during market hours, is you're taking a pattern or whatever that you see, and you're getting in and you're getting out really quickly. You're not holding on to the stock. You're making, hopefully the whole point, really for a scalp play is to have a really large position size, because it makes a 2-cent move and you just made a shit ton of profit. But even with a small account, you can still scalp as long as you're playing the setup or you're playing the momentum and you understand what you're playing. Like if you were playing costs when it was at $12, and you held on to that's not a scalp. A scalp would be getting in and out. But you could use like anything that we've talked about in the past. Inside candles are great for running a scalp, because you can see a reversal happening. Like I said, the squeeze play is great. Any type of candlestick pattern where you can recognize a reversal or recognize momentum, volume profile was great for finding the strength or the length of a move, potential move on a scalp. So I don't have a lot of indicators on this, but you could still get an idea of playing a scalp play. We talked about several different indicators that you could use. Inside candle, like I said, I was just talking about. This is an inside candle. Any type of thing that will show you a bounce. You see what I do have on here is Bollinger Bands, Keltner channels, and a simple moving average. Those show bounces. So the center line for the Bollinger Bands as well is a great bounce. That's actually where this is bouncing right here. That would be the center line, and it's bouncing off of that. VWAP is a great indicator to play with for a scalp because you can play a bounce off of that really well. And the key with a scalp and intraday scalping is that you're getting a confirmation candle. So you're not going to play, you're not trying to catch the bottom of a dip. You're waiting for the confirmation that it's actually reversing. You're taking your entry with a really strict stop loss because it shouldn't go back down. It should go up as long as your setup works. In that reversal, that it actually is reversing off of that indicator that you're using as a bounce or whatever have you. Like I said, you could use a price channel. That's a great indicator. We've shown that many, many times. I could actually bring up real quick. So this mark that I've drawn, this is actually my new updated one. I actually have another line. It's not a new wedge, basically. But anyway, you can see that it bounces off of certain support levels. And once you build a price trend line, the red and the green are actually the major price trend lines that you see that it's been bouncing off of consistently over and over again. And you can play those scalps. Now that's a really long scalp for you to bounce, take that big bounce. That's not the idea. But that's just another indicator that you could use as price trend lines, as well as any type of moving average, VWAP, Bollinger Band, whatever, the squeeze setup if you want to. But the idea is that you actually see the confirmation with a strict stop loss. And when I say strict, I'm talking penny below your entry, basically, kind of stop loss, because like I said, it shouldn't go down at all in your setup. Generally speaking, a good way to actually play that is to actually have what's called a buy stop order. So you probably know what a stop loss is, where a stop loss order would be it's going to sell your position if the stock gets to a certain price point. Well, buy stop order is the same idea. It doesn't buy the position so it gets to a certain price point. So if, for instance, you were playing this particular dip right here, and you took this big candle as your confirmation that this was reversing off of this dip, your buy stop would be, whatever you wanted to do, but you could do it at the top of this candle, this candle if you wanted to. You could even do it at the top of this candle, but somewhere where you can say it's a signal of reverse. But that would be your buy. Once it breaks that price point of the top of this candle at 275, it's confirming that reversal. So you would get in there. If you wanted to, you could set your stop at the bottom of that candle. That's not really a really strict stop loss, but we've talked about that before. That's a good way of a stop loss, is to always set it at the bottom of that candle and you scalp it all the way to the top. But generally speaking, a scalp play would actually go, you get your buy stop entry right here, and you really ride it just up to the top of this next candle, and you're taking an exit. You're riding the momentum of that next candle because that's your confirmation. It just made a big candle move off this reversal. It's going to at least make one more. So I'm going to take it right here in this at like 275 as it makes that reversal. And then I'm going to sell at 289, or if I can get out at the top of that wick, 293. And that's just a really quick move. That's a 3-minute chart. So that's actually 3 minutes of movement, but it'd be the same idea on a 1-minute chart. You're trying to take that one candlestick move, and that's it. It's really great for somebody that's not under the pattern day trader rule and can trade as many times as they want. Once they find a setup that really works for them, that they like, an indicator that they like to bounce off of, inside candle, whatever, it's a really great way to trade consistently throughout the day. And, you know, once you've met your target for the day, if you have a target, some people don't, say don't set targets or whatever. But once you're consistent and you have a setup, I would say if you're trading as a day trader, this is your profession. You're not some millionaire and you can retire at any moment. This is your profession to pay the bills. Then, yeah, once you have your setup, you're setting yourself some sort of limit a day. So once you get over that limit, you could call it a day and be done for the day, however quickly that gets. But that's the idea of scalping. And so with those momentum plays, back to Wall Street Bets, GME, and all that kind of stuff, it's the same idea. You're not playing off an indicator, but you're playing off of volume and off of pure price action. It is just, spiking like crazy. At that point, I have no problem with, actually saying go ahead and do a market order. If it's just spiking like crazy, do a market order. It's going to continue spiking. Do a market sell, or flatten, one of the two. And get out. I have no problem condoning that because I've used it. It works. Just you're at the whim of the market maker if you do that. But it's a quick way. If there's volume, you've seen costs, GME, those ones that we're talking about will run, from, we'll take costs for example, from like $60 up to 72 in a real quick reversal. Well, that's a 15% gain on a really quick reversal, and that's a scalp play. That would be what you're doing. You're taking it. It could go all the way up to $150, whatever. But if you're playing the scalp, that would be what you're doing. You saw the reversal, you got in at whatever price, 60, 62 or whatever, and you got out really quick at 75 or 77. Those have been available to you with this Wall Street. That's just like crazy, the way that those particular stocks have had rain on all these spikes. A lot of these stocks you see spike real heavy and then you'll still get range, but that'll slowly just decrease over time into just the spike is back to like a 2-cent gain back and forth, barcoding back and forth or whatever. And it follows that price channel all the way down. And you could know just from the price channel how that range is getting smaller and smaller, and creates those wedges that I've been actually, because it will break out from that wedge if it's got reason to. Right now, the reason is the market. All of these ones that are going to wedge are going to break out and keep running one way or the other, one direction or the other. But yeah, so I don't really scalp. That's not really my play. I guess the squeeze plays that I do is kind of a scalp, but I have a different setup for it. Studley would be great to talk about this. It's a shame he's not here. That was his play. That's what he did. He only had volume and candlesticks on his chart. That's all he used.
Knowing those candlestick patterns and chart patterns become your best friend, really, at that point.
Yeah, exactly. Knowing the candlestick patterns and being able to visually see, the trend lines and stuff like that on a chart.
The actual candlestick patterns, too, if you're not familiar with a lot of them, if you have ThinkOrSwim, I know that they actually go into a good portion of detail on each pattern. You can go in Investopedia, go get a book. Big Chart Patterns, I think, has a section on the candlesticks, if I'm not mistaken. I know that's more strictly actual chart patterns, but
ThinkOrSwim, if you are using ThinkOrSwim, you can actually go to this pattern up here, click on Show Pattern, and click on Select Pattern. And they have classic patterns in here, triangles, candlesticks, Fibonacci. But I don't know if there's a triangle on, I can see a triangle on the
I think you'd have
chart,
to actually be on the candlestick tab.
I would say there are ascending triangles in that chart.
There definitely is ascending triangles in that chart, and I like that section towards the end. There's a rather large ascending triangle at the very end, which is an indicator to me that momentum is coming
But if
and the
you
chart
take,
is
let's
about to gap up.
see, we could definitely do like candlestick. You can click on candlestick, Fibonacci, classic, whatever. Candlestick, you'll put in doji. Click OK. I can't believe that it's not highlighting any of those.
3,
Are
4,
your
5,
show
6,
patterns turned on in your chart settings?
Yeah, it is.
Hmm.
Oh wait, it is. So you can barely see it on my screen, but see that little dot right there? There's a little dot that shows up.
Oh yeah, I see it.
Yeah, that's a doji. That's the candle. That's that candlestick pattern. The doji one. So you could probably make that bigger too. Yeah, you can make that dot bigger. You get a 5. You can make whatever color you want. You can also make it an arrow, up arrow or down arrow, if you wanted to. So there you go. So if you were trying to play a candlestick pattern and you're just not good at recognizing it, I wouldn't call some of these a doji. Like that. That's not a doji. This candlestick right here. But do I have it on doji or did I select a different one? Because those don't look like doji. That's not a doji. That's a doji.
Oh, you know what? Is
No.
it going off of candlesticks
Oh,
or
yeah, it
open
could
all
be
sheet?
because I'm on hiking up. Yeah, it's gonna definitely go off. Yeah, so that's a doji. That's a doji. That's a doji. That makes more sense. Okay, so yeah, you have to be looking at candlesticks. I use hiking up sheet. It's a lot better in my opinion. Um, I actually like the Heiken Ishi doji candles. They seem to show trends. Like right here, a doji inside candle, so to speak, doji would usually show a reversal, um, which these don't. But anyway, uh, that's not a pattern I would use. But like hammer is actually a good pattern. Yeah, the hammer pattern is a really good candlestick pattern, especially on the longer charts, longer time frame. So work on today. What kind of crazy time frames do you have on this? There are no dojis, or not dojis. But anyway, you get the idea. It does have those built into ThinkOrSwim. I don't know if other platforms do, but you can turn them on. I've actually created. You can actually make scanners for them too. I've used it to make scanners. I kind of gave up on that scanner. I didn't quite find it as useful for me. But if you have a particular type of pattern that you really like to to play, I know a lot of people that do, like on a specific pattern on like just the 45-minute time frame. They really like this pattern, and they will always play it whenever it shows up. Well, you can make a scanner that will do that for you in ThinkOrSwim. We'll get into that. We'll get into that in a completely another episode or talk.
I have my specific chart candlestick pattern reversals that I look for just to kind of confirm the trend. But again, you do have to be watching that candlestick trend to be looking for those patterns, which I have one small chart set up for that. But for the most part, I'm looking more overall the chart patterns. I don't do as much scalping as I'm trying to grow my account. I am a small account trying to grow that. So looking for the squeeze setups, the wedges, the ABCD patterns, which, I mean, you could look at a wedge pattern on a daily. Actually, I'm not sure which one you had up there earlier. I saw ABCD pattern all across it. I mean, especially with the momentum lately, that's really been the key thing there too with those patterns. Just making sure that you have your key momentum.
No, the ABCD pattern, and there's another pattern that Tim Bowen talks about all the time. So Kermit, you'll probably know quite a bit about it. You're a big Tim Bowen fan, but it's the VWAP hold high a day pattern
TBV.
has really been played out really well. It's kind of like the ABCD pattern where, as far as intraday goes, where it's a spiker and then it pulls back a little bit, consolidates the rest of the day, and then it spikes late in the afternoon. It's the same idea, but this is it holds the VWAP
All day long,
throughout
baby.
the day, all day long. It holds the VWAP, and then it breaks out over the high day and then keeps going. And so that has been a really great pattern to play with the current market. So keep an eye out for that type of pattern. If you're logging in at around lunchtime, find the tickers that are holding around VWAP and consolidating. And look for that breakout to the upside. And it's going to break out over the high day. You could take an entry before, you could take an entry right on the breakout if you want an early risky entry, or you could take a entry on the high day breakout. And that's where that buy stop that I was talking about earlier would actually play, because you can already have your order in at the high day or a penny above the high day or wherever you want to set it, and you're taking your position right there. I wouldn't set it right at the high day, because a lot of times you'll get a spike to the high day and then it's going to pull back because that's a resistance, obviously. So you want to play after it breaks out. But again, great pattern. That VWAP hold high day has really, really played out well in current.
Definitely one of my favorite patterns to play, especially if I played something in the morning and I used one of my limited trades that I have, and I'm looking for a setup in the afternoon, something that could potentially run until tomorrow. I'll definitely look for plays like that, as I like to play swings. Those are my favorite. I can grab something in the afternoon, swing it until 4 a.m. or possibly later, and it spikes up in the morning, and then I sell that off after a beautiful swing. And those swings with this current market, they've just been solid. They've been solid, consistent
And they've been
setups.
really, really solid. Really,
Very
really
solid. And they identify themselves. If you're patient and you wait, those swings have been they call themselves out. You run your scans and you're just looking at 4, and you're doing what everybody else in the market is doing. You're just waiting for that one stock. It's usually always one, sometimes it's 2, but it would be that one stock that'll just call itself out, and usually anything above 10% in the after hour. That's something that you want to get your eyes on, because that's usually going to be your swing. But you can pull back the tape and you can look and say, okay, this was hanging out near VWAP all day. It broke out. Now it's above 10% in the after hour. Yeah, this baby is probably going to go until tomorrow. I definitely want to see what's going on with this.
And that's another great play, though, with that VWAP hold high day, is actually the after hours news spikes. The ones that run on news after hours are going to pull back, and the ones that hold that VWAP, generally, that's a great, a great play. Once you see it start to break to the upside off that VWAP after some consolidation and holding there in the after hours, you play it, it's going to run the next day as well, like he's talking about.
It's almost like a guaranteed setup. I mean, nothing in the market is guaranteed. I don't want to give people the notion that anything is guaranteed, but those are probably as close to as guaranteed as you're going to get, that you'll be able to pull some decent profit out of it with minimal risk, as long as your broker allows you to execute your trade in the morning. And if you don't have a broker where you can execute it early in the morning, unless the news is like really, really strong, foundationally sound news, then you want to be able to try to execute that trade at like between 4 and 6 usually.
Yeah. That's usually those type of plays for me are on my Trade Zero account in the
I
morning.
don't do 4 a.m. trading, but I've been doing more overnight holds lately. And with how the market's been, I've been able to get some previous losses back fairly quickly. So that's been nice. But plan on adding some funds to that Webull account of mine so that I can get back on those 4 a.m. plays eventually. Not rushing anything, but been kind of watching them. Those those overnight holds, like y'all have been saying, off news, holding those VWAPs. Those have been great plays. This market's amazing for it, and I don't
For
see it
those
going
of
anywhere
us under the
necessarily.
PDT, it's a gold mine for people under the PDT because
You're not using it for day trade.
right,
Yep.
you're not using a day trade, and if you already used up your day trade, this is a way to generate additional profit to get
Exactly.
yourself closer to that 25K
I mean, you
mark.
don't
So
even have to have 4 a.m. trading or pre-market trading for that even. I mean, just having the overnight. I mean, it does benefit you because if it's going to be one of those shorter lived plays where it's not that great news and it's just an overnight spiker where it runs in the pre-market 4 a.m. and then it's dead in the water after that. Yeah, you may get some gains off of it after it pulling back, but same time, there could be bad news following it. But that's where obviously having that pre-market's going to be your best friend, really. The overnights on the swings are going to be better off if you don't have that pre-market 4 a.m. And that's really what I've been focused on lately. And I've been having some good plays. I've been happy with the trades that I've been making. Of course, didn't exactly expect all this.
So yeah, this would be. I mean, it didn't even pull back. It didn't even pull back to a VWAP. Fun, crazy. But with it holding over VWAP like that, that's a decent play for tomorrow. If you would just take anywhere in this consolidation zone, you'd probably be in all right shape for tomorrow. Now, of course, you never know. Funds already run with this huge spike. Who knows? But play your own risk. You know,
right.
play your own risk, play your own setup or whatnot.
Well, the only reason
But
I
that's
took the play
good
was the
example.
news. The news was real solid, and it made me more comfortable in the play. We kind of talked about it offline, but I took this play at 250, $2.50, 80 shares, and I took it because the news was fantastic news that they set up a contract with Honeywell, which
Yeah.
if you get a contract with
So,
Honeywell, you're doing a lot right.
and NTN's another spiker. I just happened to pull up, but NTN again spiked kind of during the day. So this is kind of not what we were talking about as far as an after hours spiker. That's one that really it made its move after hours. But this is a good example of it spiking, pulling back, holding the VWAP. That's kind of the chart you'd be looking for. Now that VWAP's higher than it should be, or I mean not higher than it should be, but lower than it should be because of the spike throughout the day. It would be higher up if it had just spiked only in after hours. The VWAP would be higher.
What's your opinion on that initial spike, the pullback, and then the spike again? Is that just market reaction, or do you think that's people taking a while
This
to
right
get?
here.
Yeah. What's your opinion on that? See, that first spike, you got your drop, your pullback, and then it spikes again, and the second spike was harder. What do you think is the cause of that?
Well, it bounced off the midline. It bounced off the midline of
Okay.
Bollinger Bands. So your midline, I don't have it turned on.
I think it's just the way it hit people's scanners, and they saw it hit the scanner with the pop, and then a bunch of people jumped in after the sell-off.
I mean, yeah. What was the news on that anyway?
It was some buying from a couple of different. It was like was it 13G?
Oh,
I
active
believe.
stake. Oh yeah, no, active
Yeah.
stake, man. Active stakes. Oh yeah, active stakes. I love active stakes. Active stakes or passive stakes because you'll see those. And this would be a great play. A great play for tomorrow with it holding the VWAP. But yeah,
One of the active stakes is DPW too, and DPW is we all know what they do. So
yeah, that would be why. But
okay.
where it bounced at, I would say probably not the midline. It never really hit the midline. Kind of, but I guarantee you there's an indicator that I'm not using here. EMA, probably EMA, if that's 9. maybe EMA 14 or something like that.
In your opinion, why is that midline bounce so important? Just for, traders that I haven't been trading that long. I'm going on 2 years, so I study my ass off. I don't profess to know
any
everything.
any
So
type of bounce, off a Bollinger Band is not just midline. So, for instance, these right here, see it, it drops, it touches
yeah,
that band and
yeah,
bounces off of it. All right.
okay,
And when it pulls back up, now it does actually break the midline, but a lot of
uh-huh.
times, like if you were playing this bounce here, this is
Yeah,
a scalp play. This would be a great, since we talked about scalps, this would be a great scalp. You know it's going to bounce off that Bollinger Band. You have a good idea of it. The
okay,
confirmation is actually this next candle because it's now above the Bollinger Band, so it actually pulled up. So you play it right here somewhere. Your actually exit would be at the midline, right? Because it's more likely to bounce off of that midline, especially when it's downtrending on a downtrend like this from the top. It's more likely to bounce off that midline than to break through it.
that first green candle off that second red candle, is that technically an inside? Is that technically an inside direction change candle?
Which one is first?
So no, not that one.
Here?
That one right there. Yeah.
That's definitely inside. I would play that all day.
Okay, because that's where I would have picked it up. 'Cause based on our previous conversations on
Yeah.
when you should get
Okay.
in. Me looking at
So
this chart, that green
yeah.
candle right there would have been my in.
So this right here, you've got a couple indicators that are just perfect. So you've got this
Uh-huh.
bouncing off the Bollinger Bands, and your next candle is a confirmation that it actually bounced off those Bollinger Bands. It didn't break down. It didn't continue
Ah,
lower. Okay, and then
okay.
you've got an inside candle after it. That's a huge
See, that would have
confirmation.
been me.
Hey,
That
it's
would have
going to
been me right
reverse.
there. That
Yeah, it's
inside.
going to
Okay,
reverse right there. Okay, so you've
gotcha.
got two confirmations right there.
Whoa.
Now, another confirmation would be actually the candle after the inside candle. Okay, now it's breaking out up it over. So yeah, it's reversing. Now, of course, you're decreasing your profits every time you wait for another confirmation.
True. True.
Another
So
confirmation right there at that I used to use. I don't use it as often anymore, but it is the EMA 4 and SMA 9. And when you have that cross, when you have the EMA 4 across the SMA 9, that would be basically your signal that the trend is
well,
continuing.
yeah, you've actually got SMA 4 and SMA 9 on here, pink line and blue line.
I
So
don't have
right
that on
here is
mine.
the cross. Right here is the
Put it
cross.
on
So
mine.
you've got right here is the blue EMA 4 or the moving average, simple moving average. No, that is the EMA, and then the other one's
That's
simple.
an old setup. Holy cow.
So so yeah, blue, and then it crosses above this. So that would be another confirmation right there. But again, you're killing your profits if you're only going to play it to right here to the midline. You're just, you're only playing for 14 cents there. Now, keep in mind, 14 cents. Let's say you take a 1,000 share position at and go 14 cents. That's $140.
Yeah.
I mean that's not bad. If you're playing, if
No.
you've got 25 over the PDT rule, you can do that many times a day. Yeah, that's great trade.
Yeah, it is.
It's
That's a
a
good
really good
signal.
setup.
That's another good signal if you do take, say, that dip off that inside candle, and you're trying to watch for the trend, and you're putting your stop loss a little bit lower. You're really kind of just eyeballing it because you're not sure if it's going to break out or not, but you are doing a scalp play off of it. Watching that SMA and EMA crosses, that'll help you stay in it as well.
Mm-hmm.
So
and now we'll talk about scalp plays. So again, this would be over the PDT rule. You've got a client that allows you to do reversals and stuff like that. This is another great play right here. So it breaks out over that midline, right? It breaks
Yeah.
out over the midline, and then it starts to pull back. As soon as it starts to pull back, you already have a confirmation right there. You don't even have to wait for it to break that midline and actually go south. your confirmation's already there that it's not going to continue up to the next Bollinger Band before it pulls back. You've already got your confirmation. So you've got a short play right here. It hits that the Bollinger Band right here. You reverse it and you play it back up. You fucking can reverse it again once it hits that midline. It breaks the midline. So in this case, I wouldn't reverse it there. You would actually wait, but you would want to reverse it. This would make me reverse it quickly, and then you get shut out, unfortunately. But so you can play those bounces and reversals constantly off of Bollinger Bands. And the reason Bollinger Bands, it's a really popular indicator because it's one indicator that gives you 3 support levels, support and resistance, you know, that consistently change with, you know, as the price changes.
I believe the midline are one. Correct me if I'm wrong, but I believe I don't know which one's which, but one of them is actually a EMA, where the other is an SMA.
Yes, on here, yes, correct.
On the Bollinger Bands and Keltner.
Oh yes, that's correct. Yes, correct. No, you can change it. I think they're actually set to.
Feeling good about my plays in the morning tomorrow.
They're set to simple, but you can change it to exponential, weighted, Wilders, whatever you want. I recommend sticking with simple. And the reason you want to stick with, okay, a lot of people ask, actually, oh, I added this indicator. What settings do you use? I would never use anything more than the default, because the reason you're using that indicator is to tell you what the market is thinking, right? What the market might do in a certain situation. Well, if you're changing all those numbers and everybody else is just adding that indicator to their chart and not changing those numbers, then that's not helping you.
Webull users do need to look up the actual standard.
Yeah, that's another thing. Yeah, Webull does not.
Any other broker does not.
The correct numbers all the time. And Webull, I don't think, uses 0.5, so you can't even make the correct number.
Yeah, it doesn't use decimal points. It shows it, if I'm not mistaken, but you can't.
It does show it, but you can't set decimal points. You guys are correct.
I wonder if you can on desktop, just not mobile.
It's possible on the desktop because desktop has way more features. I've noticed that.
The quote unquote beta or 4.0, whatever they call it now.
The desktop, yeah. For those of us that are listening to this that use Webull, besides myself, the desktop version has way more features, more scanners, more everything. It's like it's like going to Super Walmart versus going to the corner store. That's the big difference between Webull and Webull desktop. So like if you're going to take your trading seriously and you want to use the same platform on your mobile as well as your desktop, I would advise using the desktop version. There's way more. And just a public service announcement, if you make customizations and settings on the desktop, it does not carry over to the mobile, so you will be upset if you make all these great configurations.
And that's 2 different interfaces technically.
Yeah.
Desktop is now on. It does have the older version that does sync with your mobile, if I'm not mistaken. But the new 4.0 is completely separate from what you get on your phone.
It's in production. It's coming out soon. Soon they will sync together. That's already been complained. We're just waiting for them to address the issue. But for now,
so
yeah,
I'm gonna talk real quick about Jay, your original question on NTN. You know, why would it bounce here? You know, I'm not exactly sure. I don't have an indicator on my chart right now that shows me that it would bounce off of that indicator. Like I said, the midline is close, but it's not quite right. But that doesn't really matter. So say you were playing this spike right here. There's if you were playing this news spike, you got in real early. You got the news. Or say you already had a position. A lot of people had a position in TN already. You want to play this spike and get out.
Yeah.
There's a couple indicators that tell me to get out. First of all, this inside candle right here tells me. An inside candle off that inside candle, that, turning red, that tells me to get out. The Bollinger Bands, if you actually use those, as soon as they start to turn, that tells me to get out. As soon as it starts to flatten, let's put the term in that tells me to get out. But it's the same thing. So right here, it's the same thing. You've got plenty of indicators that tell you that it's starting to reverse. So a couple indicators actually. This first, that's an actual bullish. You would want that bar to be a little bit, I guess, higher, but that's a bullish candlestick. That first red candlestick. It's a hammer technically, not quite, but it's that's a bullish candlestick. Basically, it's sold. It went this low on this candlestick, but then it pulled back and did most of its trading up in this area. So at some point in this candlestick, as long as the close is not the reason that this wick is this low, then that's a bullish, that's a bullish sign. Now, I wouldn't take an entry off of that. I'm just saying, I'm just giving you an example that, hey, we're getting the buyers are starting to take more control here because the sellers are selling off hardcore and the buyers brought it back. Same thing on the next candlestick. Now that it's a huge bar, but again, you don't have a wick on top where the buyers had control for a minute and then lost. You basically have a wick where the sellers were winning and then lost their control. Not necessarily that the buyers have control yet, but that it's leaning in their favor, so to speak. And then you've got an inside candle off of that, and then you've got a true inside doji off of that. That would be my entry point, actually, would be on this inside doji. Would have been my entry point, but you could have also waited for it to actually reverse on the next candlestick. It goes higher, and that would have been your entry point, basically at the high of this candle. If you were scalping this play, you could do what we were talking about, where you're just going to get in and get out. But this is a beautiful run, where what I was talking about, where you're changing your stop loss each candlestick. So when it's consolidating right here, you made an entry. I wouldn't change my stop loss. My stop loss would still be pretty low, like probably like this, right there at 456, 455. But as it starts to rise, you're changing your stop each candle with the bottom of that candlestick. And so you're not actually getting stopped out until right here, running that whole thing at $5.40. And that's still technically a scalp. You just scalp that play really quick. But, that's a long scalp. But you'd have no reason to necessarily hold it either. I mean, not hold it, but sell it with what you're seeing right now. Maybe this candlestick right here, where it starts to lose, you start to lose some buying, and sellers start to take control. Scalper would probably definitely exit right there. But that's
You talked a little bit about it, and I kind of wanted to ask you about it. The active state. What's got you so excited about active state purchases on a stock? Why is that bullish momentum? Those of us that don't.
Because somebody with a lot of money holds interest in that company. That's good. That's good enough for me.
Gotcha.
I mean, it really doesn't even matter. I don't know, unless it's savvy management.
Yeah.
I really don't. I really don't care. If I see savvy management takes an active or passive stake in a company, I'm not playing that stock. I don't know if anybody knows about savvy, but they like to keep a good man down. So let's
Yes,
just
they
put
do.
it that way. They like to keep a good man down. TMDI, savvy used TMDI. Look at TMDI now. CMBI used to be way down, way down in the dollar range.
So it's important to know who owns what you own. So as they say, know what you own, but also know who owns what you own.
Yeah, and if you want to know who owns what you own,
Webull is good for that.
It is fantastic for that.
Webull is very fantastic for that. It's very easy to access, but you can go to I've got Benzinga Pro that I would use, but you can go to the SEC Edgar website or whatever and look up the Form 10 for that company. And the Form 10s are done quarterly usually.
Yeah,
And so it's a quarterly report of who's invested in that company.
there it is. Just drop some
So
knowledge.
Yep. And
you
then
look
just
up,
look from there. Look at the most recent active stakes from there.
yeah, from there, look up the forms, the Form 13. Those are your passive stake Form 13D and SC 13D is the active stake, and then passive stake is the 13G.
Phew. Yeah, this one is Alt Global Holdings for NTN. Milton C. Alt, which
So yeah,
is DPW.
it is definitely a good idea to know who's interested in your company.
Sure.
That is a good way to find out. Like I said, Webull is really good at just showing it to you, really quick access. But yeah, you've got that information. Anybody does. Go to the SEC website and you just search. Really
Appreciate
easy.
that knowledge.
Search really easy for those forms. Form 10, 13D, 13G.
Yeah. Cover some broad topics tonight. When to get out, what forms to look at to know who owns what you own, and what to
I
stay away
believe
from,
there
or who to
is
stay away
a
from.
SEC in the educational section. I believe there is some good SEC documentation in there. There's not much right now, still getting built up, but there's some good starting points in there.
Yeah,
Stuff
it
is
definitely is.
boring to try, but it's important.
Definitely is. Yeah. So yeah, more importantly, just on the intraday scalping point is just, you know, you're mainly playing either patterns or an indicator that you're comfortable with, and and you're in and out. You're quick in and out. And there is another term of scalping. Works really well 4 a.m. to 7 a.m. area, but really pre-market or after hours. Another current term for scalping is spread trading. Not really what I would call scalping necessarily, but spread trading is where the spread might actually be 10% spread, so to speak, and you just get lucky and you put the lowest bid in and somebody takes it, and then you put the lowest ask, somebody takes it. You make a quick move off the spread. That's pretty risky play. If it's got a high spread, it doesn't have a lot of liquidity.
The two candles, red candle letting you know the trend change. That's really cool. I appreciate you dropping that knowledge.